All right. Good morning, good afternoon, good evening to some of you. This is Will Bridges from 123 Trade. We're about ready to get started. We've got a lot to look at here today. Hopefully the webcam thing works. If I'm skippy and it looks like I'm doing the robot the entire show, then by all means, we're going to shut this off because I want to make sure you guys can actually see charts, all that. As far as trading goes, I know that people like to be able to see your face, so I get that. But good to see a lot of people still floating in the room. It's like gonna be a big group here today. Good to have a lot of you back. How we doing, Ray? Very wet and windy Plymouth, UK. It's a very sunny and bright day here in Florida. But we've got lots to cover. I want to look at some economic events that have happened. Earlier this morning, Canadian retail, about 8:30, Canadian retail sales numbers came out extraordinarily strong. Europe's been looking at some pretty bullish numbers. U.S. unemployment claims are actually half of what they were in January, which is maybe a good sign, maybe just a sign that people don't qualify for unemployment anymore. We'll kind of see how that works out. But generally, lots to talk about here today. Some of you might be here for your first time, so I want to give you guys a little bit of an idea of what we normally do and what we normally cover in here. We're going to do lots of live market analysis. That is really the primary thing. I want to make sure that everybody understands how to use the fancy tools and really just do basic technical analysis and find trend direction, because a lot of people are very uncomfortable with figuring out, is the long-term trend up or is it down? What does long-term trend mean? So I want to help everybody figure that out. We're going to show some automations in here. If there's something in specific that you want to see, that you want to understand more clearly, then by all means, put it in the chat box. If you're watching this recording later, I'm going to be putting this on YouTube as well. Then put it in the comments and we'll show it next week. If you're watching the recording, if you ask right now, I may just show it in this session here today, depending on what it is. But we're about ready to get this thing rolling. I think we are at 9 o'clock now, so we might as well get the show on the road. First things first, risk disclaimer. You guys have seen these before, and you're going to see more of them if you keep trading. But basically what it says, if you don't understand, is really just that if you put your money in the Forex, or really any market for that matter, then your capital is at risk. You have to risk it to get the biscuit, folks. There is no such thing as a guaranteed trade or a guaranteed win. The only thing that you're going to be able to control is your risk. My strategy doesn't control the market. Neither will yours. I don't care what it is. Unless you've got a Rothschild sitting with you at the desk, then you might be in for a rude awakening. So you never want to trade with money you can't afford to lose. That's really what it comes down to. If you do have a question, give my attention in the chat box. I am paying attention. Jorge, how we doing? I hope you're figuring out the automation we talked about the other day. In Ecuador, very cool. I need to learn how to speak Spanish. But if I miss a question during this presentation, and well, let's just say if you're in here, get my attention. I want to try to cover as much as I can in this session here today. If you guys have more stuff that you want to see, maybe after you watch the recording, I know a lot of people watch this twice, then by all means put it in the comments section on the YouTube channel once we get this thing posted. Hold on, we got another quick question here. Yeah, thanks for working on it. Yeah, that helps a lot. The being bilingual thing. Hablo un poquito español sola. Estoy practicando. You know, I'm not quite there. Trabajando. But you know, really, this is a little bit about what we do. For those of you that are here for your first time, or maybe they just kind of stumbled upon this channel online. But we assist in getting regulated, secure brokerage, and everybody that's in this live session has already done that with us. Really, we just want to make sure you work with somebody you can trust. You don't have to sweat about your trading account. And when you want to take money out of it, you just withdraw it. You don't have to worry about, you know, not being able to get your money back because it's in a country you can't find on a map. But really, main thing that I want to get across is that we're here to give as much guidance and mentorship as we can. There is a ton of experience on the 123 Trade team, and we want to make sure you guys get past the hiccups in the beginning. what broker do I choose? How do I hook up my charts? How do I run this trading robot that I have? And why do I draw this line here? So we're gonna do lots of weekly trading and analysis. And really that's something that we used to go through a lot of other topics. We used to talk about how to place your first trade, and I'm going to show how to do that. We're going to talk about equity management, how to figure out what lot size you might want to put and how that's going to affect your emotions and the way that you go through your week, and if you're profitable or not. It really comes down to a lot of things, but you can trade from your mobile phone, tablet, whatever you want. Okay, we used to show how to do all that stuff, install all that stuff in here in this session. At this point, it's actually available on our website. So if you guys check out the 123trade.com/getting started page, then really everything from setting up your charts, setting up your broker, setting up a MyFX book so you can automatically track your results. All that stuff is on this page. So if you have not seen that, then I strongly recommend checking it out. We are going to show a lot of tools in here. There's not a ton of them we recommend because, well, let's just say there's a million of them, and really there's not a whole lot of difference in some of them. So if you haven't been around for a long time, you don't realize that we come out with 30 new trading strategies a year with the Smart Trader team, then you might think that I need to have them all, got to catch them all like they're Pokemon or something, but that's not quite the case. So we do recommend a few. Those are on our recommended trading products page. If you want to know how to make your own automations, if you don't know how to code, for example, and you want to make a robot based on whatever your strategy is, Build-A-Bot's pretty sweet, and you don't have to learn how to be a programmer. So there's videos and all that stuff that you can get to through this recommended trading products page. So check that out if you want. If you're trying to add more money to your account, we have up to $22,000 in stuff that you can get for free. All that stuff is on this page here on our premium page. I'll put all these links below the YouTube page. You guys already, well, let's just say the website is 123trade.com. It's pretty easy to find. But that's enough of that. Let's get to the fun part, the part everybody comes to see. Let's get the charts up here. And we did some trading last week, to say the least. We have made a little bit of a pullback versus where we were earlier this week. Such as the way of swing trading, it's not just going to go straight to where you want. What I want to do is go ahead and check out where our positions are and what's going on with each of them before I decide to dive into a bunch of other stuff. Because I would guess a good number of you probably have a few of these positions running. I know we posted a lot of them in the Facebook group as well as the Discord server. If you're not in the Facebook group or the Discord server, then I should probably just share that link with you guys real quick in here so you guys can all get there. I do post in both of them. Typically, if I post something in one of them, I post it in the other. And I put trade ideas, links to these trading sessions, all that fun stuff in Discord as well as Facebook. So I'm going to go ahead and share this link with everybody. There's the Discord server. And Facebook, I should probably pull that up as well. I think I'd put out a couple ideas on gold and silver this week. I think there's going to be some big movement on metals, lots of uncertainty in the world. Does look like there's going to be slightly less. And looking at the economic calendar from this week, it looks like the world had a good week economically. I'm going to go ahead and share this Facebook group link so you guys have this. And I just put that in the chat. There you go. Let's get this thing rolling. So pound CAD, we got in this thing a while ago. We did close out, I want to say 180 pips or so on it last week. And really nothing has happened. I think when we closed it out, it was pretty much right here. Okay, it's pretty much the low that we were sitting at. When we closed this trade out, we're almost at exactly the same price. It is still creeping upward, but necessarily not something that I want to add more weight to at this point. We already took a profit, so most of what this risk here is, we've already paid for with our other lower entry that we had gotten in. And actually, we'd really gotten pretty lucky with the entry. We got in all the way down here at this bottom and closed out this other circle that I've drawn here. So it doesn't look like a big move, but this pair moves a ton. So I think it was about 185 pips with a heavier lot size than we're in right now. So I may just let this one ride. Maybe it falls lower. If it falls lower, I may look for a place to enter again. So if it does come back to our lower level here, let's just say something like down here where we got in last time. I thought it was a great buy last time, and I will again if it gets back there. That if that does happen, then obviously you're going to want to have a stop loss. I'm not sure if you guys can see it cleanly. I'll make this a little bit bigger here. Get rid of our widget windows so you guys can better see the drawing area here. But this is where our stop loss is on the bottom. It's kind of faint if you're not looking at what I'm looking at. But that may be a decent place for us to have a stop loss. The market has been below this price in a considerable period of time. This is all the way back to the pre-coronavirus. And the asset purchasing facility in the UK has gone up like crazy. If you guys aren't aware of what that statistic is, it's how much the central bank, the Bank of England, how much, let's just say, private property that they acquire. So they have become a very large buyer. And even if the economy isn't performing in the UK, they're going to increase demand just because, well, the central bank is buying a ton more, billions more. They've got deeper pockets than you do. So that's going to be let's just say a big effect on the market when they do things like that. And let's go to the all-time frame. I might as well take a look at this just so you guys can see what I'm talking about, because this has been going pretty sideways. And we're just trying to look at the continuation of the sideways. Where I would want to rip the tape on life and stop trading this thing long would probably be where it turned around every other time. We'll make that green. Okay, so if you are not quite in this yet, this would be a pending opportunity. This is not something that I would want to get in right now. Again, at least we're already in it. So I'm going to leave it as is. And that said, I mean, obviously you guys are going to do whatever you want. You need to understand the risk if you are going to do something like this, because it really doesn't matter what you think as a trader. I can sit here and tell you guys, I think, yeah, this range is going to hold, but it may not. This market could fall to the floor. The UK could disappear. I don't have any, like, you guys, the pound's been around for 300 years, so I'm optimistic. But like, the point that I'm trying to make right now is that you don't have any guarantee of what's going to happen. The only thing you can control is how much money you're going to risk. Okay, so this is where my stop loss is, if I want to keep it all the way down here, is fairly wide. Okay, some of you are not gonna be able to manage a 360 pip risk for a couple of reasons. More than likely, if you don't have a ton of capital in your account, then it's basically a $30-some risk at a 0.01. So if I put a 0.01 up here in my lot size, and actually we need to get to pending orders first, and then I'll do that. So I click pending, and I put 0.01 in here. Okay, my rate that I want to get in is where my blue line is. So zoom in a little bit so you can see where the blue line is, and that's 1.6901. Well, we'll call it 1.691. Okay, stop, limit. This is about 335 pips away, and my limit above 620. Okay, so a fairly solid risk reward ratio. This is a position trade. This is not something that's going to happen. This is a monthly chart. It took 2 months for it to fall this far, really 3. So I might expect it to take 2 months to get back up there. Not all of you guys are going to have the patience to wait that long, let alone the capital to risk. So 0.01, you're talking about risking about $33. And the way that I get that is I just multiply this number, my lot size, by 10, and then the number of pips at risk. So as soon as I do that, then I can figure this out. So if I do a 0.3 here, for example, then that would be 3 times 335, and I'm risking roughly $1,000. And that's really how that works. You just multiply this lot size number by 10, and then you multiply it by the number of pips that you're risking, and you figure out if that's an amount of pips that I'm going to be comfortable with. Am I going to be able to sleep and go back to what I was doing? Is this going to be the, let the market do the work type of money-making process that trading should be? It's only going to be that way if you pick a number you're comfortable with, because if you can't risk $1,000, you don't want to put a 0.3 there, or you're going to be biting your fingernails off all day and waking up at 4 o'clock in the morning to check your phone and see if your trades are winning. So that's really how that works. Pretty straightforward. I'm going to go ahead and set this one up and just say if we've been risking something like $50 per trade on everything we've done in here, I might do something like a 0.02. Okay, and that's it. That's just because I like to keep all of my decisions the same value, because Well, I look at my decisions as a certain amount, because if I'm comfortable wasting $50 on a bad decision, that's okay. Because if I know that I usually make 75 bucks or 80 or 100 on a good decision, and I can do that at least 4 times out of 10, 5 times out of 10, then I'm in good shape. And that's really what this is about. I don't have to win all the time. That's not really how you have to play this game. But that said, let's keep on moving. We've got lots of trades to talk about here. USD JPY, I'm excited about this one. I think this one's been coming down pretty heavily. This one we'd actually run an automation on, and we closed a couple trades out on this one already with the FX Zone Scalper system. So it has been doing exactly what we expected. It's been slowly working its way downward. And if I do anything on this, we've got an active position right now. Okay, so I could take profit on one of our actives if I chose to do so. And we've got a 54 pip winner here, a 60 pip winner. And I could add on my robot and just let it continue trading. That's kind of a trader's choice if you've got multiple positions open. And looking at this, our lowest risk here, we're up, the trade we're up 60 pips is a smaller position. So I may just close out the larger trade, take the win. Okay. And now I'm going to come down to my 15-minute chart here. And since this has been doing what I expected it to do, I'm going to turn on a robot to look for more of that. So I'm going to pull up my FX Zone Scalper, which I know a lot of you guys have. Visualization, if I click this button, this is just going to show me the indicators once the system turns on, so I can see when it might make a decision if I understand how it works. Max trades is extraordinarily important. Okay, so if I want to risk a certain amount, then really, I can spread that out more, and I can use this max risk, and I could set my max risk maybe at 2%, something like that, and have it open 5 trades to do that. Or I could make these all smaller trades, and it will open more trades. There's a lot of ways that you can change just a couple of settings on here and change the way this thing works. I'm going to set it to sells only, because buying doesn't seem to be working out much for the last couple of weeks. Well, we've been winning there, and I want to continue to use this trend to my benefit as much as I can until it doesn't work anymore. This is pretty much the way that I want to look at this. Is if I keep selling this and I keep making money doing it, then I'm going to keep doing that. And if I don't, then I won't. This hidden stops button here. Okay, so if you choose hidden and you turn off your computer and this thing opens up a trade before you do that, it's no longer managing the position. It won't have exit prices because it is hiding the stops from your broker and not sending that signal until the indicator reaches that level. So unless you have your computer on to have the indicators and the robot watch constantly, then real stops is probably the way to go. If you're not going to shut anything off, you're not concerned about that, we're also trading with what I believe might be the long-term trend, then I'm going to continue to just let it go. So I'm going to go ahead with the sells only approach on this guy and crank this thing on. This one does take a minute to load up. And once it comes on, this thing is just going to look for short-term sell opportunities with trailing stops all day, every day, until the market closes later today, 4 o'clock or whenever that is. So, I don't have to do anything else on the USD JPY. We can take a look at the long term for those of you that are brand new real quick before we move on. USD JPY, and let's hit the all time frame. Okay, and just to show everybody really why we decided to start selling this to begin with. And I'll draw the outer first. I'll work our way in. I know a lot of you guys have seen me do this before, some of you have not. But this is our outer boundary here of where the market has really hit its limits in the last 30 years. Okay, so I need to get the lock tool turned off here. Sorry about that. This is where the market has really picked up, turned around left, and gone the other direction, okay, at its most extremes, okay? But you can't really place a trade from there. And when you talk about people position trading, typically that just means they're going to look for opportunities on higher time frames. That's really all that means. If you're going to swing trade, then you're probably looking on the, you know, daily 4 hour for your entry point, something like that. But reality is position traders are looking at this monthly and the weekly time frame because they're not going to get in very often. They're going to look for extreme prices. Extreme. When I say extreme, I'm talking about when you get to a level like this. Let's come down to our weekly, and I'll show you guys this pattern that's been happening on the USD JPY. Those of you that haven't seen it, okay, we've got this little line that we just drew here on the top. We just kind of breached it. We're kind of backside testing it right now, maybe on the way down. That line existed over here for a while. Okay, we broke out above, the market fell. Okay, it existed here for a while, and then it broke out, and the market fell a lot. We're talking like 1,000 pips pretty quickly. Okay, so now we're at that same point where we just nosed above this trend line here, and the market's falling. And if we zoom in even more, okay, now we're on our daily chart. This is one that the swing traders might like. Okay, now we're looking at this formation here. Looks to me like a crown, and I'll draw what I'm talking about. Got our left tip, center tip, made a lower low. This could be our right tip over here. Okay, this is really what I'm looking for, something to that effect. Okay, so obviously none of this stuff is going to look perfect, you know, out of the box. This is a, you know, bearish crown, but we are getting a lower low there. We got lower highs. If we get rid of this, that's why the crown is popular, is because it's basically outlining the fact that you are getting a lower low, okay, that has formed, and here's a high, and here's a lower high. So we are now looking at this potential downtrend direction, okay, something like this. I've already turned on a robot to try to manage this for me on my even lower time frame, on my 15-minute chart. But the reality is that is what we are looking for, is more or less this move downward. Once we have, well, hit this trend that we've hit 5 other times the last 5 years and just fallen like a rock. So I'm going to continue with that strategy. I'm going to follow, well, the pattern on that one. And let's check out the Aussie JPY. This one's been very sideways since we entered. We are very much flat. It has been up. It has been down. It does look like it's coming our way right now. End of the day, this has been an uptrend for quite some time. I'm going to draw, this is the daily chart that we're looking at right now. Let's go ahead and pull a line here. And we have just broken our trend line. So that could mean that this thing is about to fall. For a lot of traders, that's what they're going to look at this and they're going to say. Depending on what time frame you're looking at, you know, I could show you where the trend line's been before on this Aussie JPY. It was there. The trend line broke, and then the market's gone up another, I don't know, 1,500 pips since then. Same thing happened there. Same thing happened up here. Oop, let me, I lost my line here. You guys can see these trend line breaks have happened many times, and the market just continues. So whatever's going on, you know, I just want to find the pattern. Okay, so we had one relatively big dip that happened, and this was all the way back in September. Okay, but other than that, when we break this line, typically, you know, 9 times out of 10, it seems like this thing has gone up. And the truth of the matter is that if you had been buying this thing for the last year, this is where the price was a year ago, and this is where the price is now. So this feels like an uptrend to me. We haven't necessarily confirmed downtrend movement on the other side of our trend yet. We've also got some, well, we haven't really created resistance on the right side of our trend line. Even if we had, I'm still not confident that this is coming down, because China seems to be producing. They're going to continue to buy iron ore from Australia, and Japan is going to continue to pay higher oil prices while the US shuts down their oil industry for whatever reason, because that's been happening all year. So all of that stuff said, I'm thinking up on this Aussie JPY still. If we come down to our lower time frame, let's check out maybe our 2 hour. We'll get rid of this big purple circle we don't need anymore. And Dump this here. So really what I would be looking for confirmation that this comes up, okay, would be a break on this counter trend line here, which has not quite happened yet. We're still in this trade. We've been in this for a long time. The reason why we got in to begin with is because we had another one down here, okay, and we were already on an uptrend. Just to show you guys, there's all sorts of different ways to find patterns in the market and all sorts of different ways to find trading opportunities. I'm just showing you a couple of trend line breaks, well, really counter trend line breaks, because this thing has been going up for a very long time. This has really already had a trend line break there. We finally got some support. This is a higher low right here. So if I'm just looking for reasons to keep myself in this trade, there's a low and here's a higher one on the right side of our trend line, on the right side of our trend line. And we've also got another little trend line, it looks like, right here. So there's lots of false breaks. This is a choppy market. It's still sideways. If anything, if you're not in this position already, then it might be something that you look for a more consolidative move, or you may try to head for the extension level that we're looking for already. Kind of up to you. There are a lot of opportunities. Looks like, can we use perfect storm for USD JPY sell only? Totally up to you. Perfect storm, if I was going to do that, I might use the range active storm instead of the trend storm, just because the market's been very choppy and very similar to what I might do on something like this. I'll just show that on the Aussie JPY, because this one I might actually hedge myself using that system, because if, well, one, we could win on both is really what I would want, really what I'm aiming to do anyways. But if things go sideways with the yen, which is possible because Japan is very secretive about what they do, then I could get dominated somewhere unless I hedge myself and I trade somewhere else and I look for diversification in my trading. So let's range active. There we go. Play. And this one in particular, I'm just going to do buys. The USD JPY, I was looking for sells only because that's what's been happening. We were in a manual trade on this one that, had we used this automation, we may have closed out some pips already, but we had not. We just traded this manually. I want to say it's been 2 or 3 weeks. But buys only, visualization, lot type, you can do fixed or risk percent. Okay, I'm a big fan of risk percent as long as you understand how many positions. I'm going to put in 2. Other than that, this one's pretty straightforward. I don't want to go too heavy with the account. Risk percent is, if you have a large account, is going to be bigger than if you do the minimum, fixed 0.01. Fixed 0.01 is the minimum lot size you can place, period. So risk percent is a favorite. If you're not good at math and you want to trade something that you risk 1% with, that's a pretty straightforward way to go about it. But now what we're looking at, we are in the bottom zone of our donkey and channel, kind of caught up in our Keltner bands in the middle of this system right now. Should be a, should be an entry at some point here soon. I don't have to know when. It could be right now, but frankly, I don't have to sit here and wait. We can move on. All I have to do is look at on a different chart. I've got my zone scalper running now on my USD JPY. I'm running my perfect storm system on the Aussie JPY on a higher time frame, so that one's going to be less erratic. If I wanted to trade more often, then that's something I would need to maybe crank it down to a 1 hour or a 30-minute chart. I don't typically go any lower than that with the perfect storm, but some people do. Kind of up to you. By all means, if you understand how the indicators work, then you can turn on the visualization and look at it and see what would, you can kind of near-term curve fit your own chart and calibrate your system for whatever currency cross you're looking at. So you don't have to use the same time frame on every currency. If you turn on the indicators and it looks like it works out better on a 30-minute chart than it does on a 2-hour, then that's an easy decision for you to make at that point. You run it on the 30-minute. But let's go ahead and keep on moving here. Still got lots more to talk about. I want to show silver for sure. Euro USD has been an exciting one, I think, recently, because we have seen some pretty solid euro strength. Let's go ahead and pull that up. Maybe not so much euro strength as dollar weakness, but everybody's got their opinions. Okay, so let's go to the all time frame. Those of you that are brand new here, If you guys have questions, then by all means, air them out in the chat box. Like I said, if you're watching this recording on YouTube, then air out in the comments section, because I would love to show whatever it is that you didn't understand in clearer terms next week. But first thing I want to do on every chart, I want to find out where the boundaries are. Okay, this is all of the data on the Euro USD, and I want to draw the outer bands, the limits of where the market has been. This looks like an uptrend with all of the data to me. And really, we've got a couple of big counter trends. Okay, so we've got this counter trend that was broken, years ago, and the market went up all the way from where it broke all the way down here at 105 and change, and it reached a high of 159. Right now, we very slowly came back down to where we're at. We've broken that trend. Okay, so very similar to what we did years ago, and I'll circle what we did years ago so everybody stays on the same page. This is the break I'm talking about years ago. Okay, here's the break. Well, this past year, and a lot of this is happening because M2 money supply has climbed in the United States at a much faster rate. When I say M2 money supply, I'm talking about the amount of money available in total. So there are more dollars in comparison to euros, and we haven't seen a big, well, let's just say we haven't seen the movement happen to really account for that yet. So there's a lot of places that this could go, and I'm thinking higher is really the number one thing to realize. The place where we are aiming is the most recent high, the high that we saw in 2017, 2018. I'll come down to the day chart and give you guys an idea, because I am expecting the market to take a break once we get there, and maybe we get back in. Okay, but this is another situation where we're looking for a big trade. We're looking for hundreds of pips. Our profit limit that we're looking for is all the way, 324 pips away. This is another situation where I may come down to something like my, maybe my 1 hour time frame. And I may actually look for the trend storm on something like this. The trend storm is going to be aiming a little bit heavier up. So this might be a good storm, a good chance for the perfect storm. So I'll go ahead and actually, this is the indicators window. Let's go to Smart Script. Here we go. And I think I had promised a manually traded system that I was going to show someone here this week. So I think we're going to show the Heikin-Ashi smoothed indicator with the flip it. Let's see, perfect. And maybe we try out this. Actually, let's just click enter. Trend storm, play. Okay, first trade lot size. Let's just say that's set for a mini lot. As of right now, max positions is 5. So, if this adds positions, they're going to be smaller, which may not be how you want to run this, but that's kind of up to you. Personally, I think that that's a decent strategy, as long as you're willing to stick to it and you're okay with, well, risking the 0.1 to begin with. Okay, so that's important to understand. Pips between trades, 10. Okay, that you might want to crank that up higher for currency pairs that have a bigger daily range, because, for example, the pound CAD is going to move 3 times as much as the Euro USD. So you may want to make it 30 on something like that. But we are on the Euro USD, so maybe I make this something like 15, because I don't want this thing to place trades super often. The market's going to move 40 or 50 pips per day on average, just in my experience. Sometimes it'll do 100, sometimes it'll do 20. You get the point. But I'm going to go ahead and click apply and start. And this thing's going to be looking for buying opportunities on my Euro USD. So I don't have to sit here and do anything with this anymore. We can move on with our lives. I can go look at something like the USD CAD, which it seems like we never came back up to hit our pending entry. We might as well dump that. That ship sailed. Goodbye. Perfect. And let's go to the all time frame for this one. Clear out everything that's on here. Start this thing fresh. I think this is probably one of the hottest sells that has been around in years. And the chart really kind of screams that. It's kind of old news, I think, for some of you. But here's really what I think has been happening long term. This is our all-time price. We got this little megaphone type of deal going on the bottom. That's really kind of indicative that we're in more of a sideways market than anything else, because I can also draw a big box on here. The reason why I like drawing the rectangle is because, well, it forces your eyeballs to pick really important price levels and where the market may head, where the boundaries are, where it turns around the most often, because I have to physically pick. And if it doesn't make sense because there's more turnarounds at another price, then maybe that's where I want to aim. So I think that there's a ton of turnarounds at all of these prices, and I'll show you guys why I picked this area to be our overall range and why this might be more useful for me than if I draw just straight trend lines on the outside here. So we had our turnaround there, we had another one here, another one there, and we had two of them, big long wicks, more recently. On the bottom side, okay, we had a turnaround here, we had another one here, 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 and here. Okay, so the market for some reason liked that price on the bottom. That price on the bottom is roughly $1.05. This price on the top is $1.43. We have been making an absolute beeline towards the bottom of this box since the beginning of the COVID crisis. For whatever reason, we have decided that we wanted to break some pretty serious lows. I don't know if you guys see this here, but we haven't seen some of these lows in many years. This level here, okay, that's from September 3rd of 2017. We just broke that. Looks like this past week. Okay, our next target down here, this hasn't been touched since 2015. And we have been doing that a lot, hitting these multi-year lows and new fresh multi-year lows for all of really the last year. So I'm going to go ahead and delete this line here. I'm going to show you guys, we're going to get into trend. Okay, I'm going to zoom in here a little bit. You're going to notice a similar pattern I've shown you on a few others here. But there was a trend for a while and it broke out a little bit. It nosed above and then fell, hundreds more pips. And then it nosed above and it fell, 1,000 pips since that breakout. And it nosed above. There's the 1,000 pips happened right after this other nose above. So we got faked out twice on this one, which is tons of fun to see. But, people that just blindly follow a strategy like, oh, if trend line breaks, it's coming up. That isn't how this works. Your job is to find a pattern. That's what this is all about. Obviously, the trend can't change directions if it doesn't break a line. So you're never going to get a U if you don't break a line in the middle somewhere. So that is fair, but at the same token, you need to see what happens, okay, and what actually goes down. No pun intended on that actually goes down, but this has been going down, and I want to see how far. I'm going to use this smart Fibonacci tool. See where it thinks it's headed. We're at an extension level right now. We may be at a point where we can get a little bit of a reprieve. And Canada just had excellent retail sales numbers. US had pretty shoddy numbers last week. We are looking at much better unemployment numbers, so we are supporting fewer people without jobs than we were. So I don't know if that means the government's going to save money, and that would actually be good for anybody. But bottom line is that we are at our bottom line right now. So this may be an opportunity for us to enter short term as a buyer at this extension level, because this is also a place where the last time we hit this price, the market went up, I don't know, 400 or 500 pips. So it wouldn't be crazy for us to see 100 right now. So I'm going to take a look. Do we have active positions on this USD CAD? It does not appear that we do. So what I want to do is figure out how I can manage this risk. Let's come down to a slightly lower time frame here. Actually, before we do that, I'm going to go ahead and pull up a manual Fibonacci range here on our most recent AB boundary, which is right here. And I only want to trade this back to the 382. And it does look like a fun thing to aim at because there's a big turnaround that happened at that price. Let's make this green. Okay. And now all we need is a stop loss. If I want to look for one of those, I can turn on smart support and see what's close. We've got close support, close enough, I should say. I'll make this line red. So we're on the weekly time frame. This might be a solid swing trade. Some of you guys might call position trade. I don't think so. This is more of a swing trade just because we're counter trend. And I don't anticipate this to take an incredible amount of time. This would be against the trend. Okay, the only reason why I would even think about doing this is because we are at an extension right now. This may come down a little bit further, so some of you may actually want to try to enter all the way down here, which it wouldn't be a bad idea to split up your entry point and maybe get in twice and shorten. If you're going to do something like that, then you could shorten up where your target is headed, and you don't necessarily need to look as far up. So what I mean by that is that since we are at what we perceive to be an extension right now, then I could get in twice, pull in my expectations from this green line where it is now to maybe my 236 level of this wave instead, which would be much more likely to happen. And now I have two trades here. I'm looking for less of an overall move back upward. We are at a low price, hitting a price pocket right now. This thing has been making some pretty strong moves downward. The good news already came out for Canada. Now, I usually like to buy the rumor, sell the news is usually the way that I've looked at fundamentals, because people have been planning for stuff like that for days, weeks. You're not the only person that looks at this stuff. So I think I might go ahead and set up both of these positions. I'll zoom this in so you guys can see what I've got here. So I may go ahead and set up the buy position right now. Now we're kind of hedging our bets, because if the dollar does see strength, then we could be in a bad position on the rest of our trades. However, now I'm going to basically hedge myself. If we take some profit somewhere, well, let's just say you can't go broke taking a profit. I want to make sure if this thing comes against me, I want to be ready for it. Because the last thing I want is to expose myself to a big risk and a loss that's going to affect me being able to trade long term. That's why you only want to risk, 1-2%, so that you can afford to make a bad decision and just move on with your life. Trade tomorrow, find something else, because there will be more ideas. I can almost promise that. Let's see. So current market price, our stop loss that we've got planned here, talking about 154 pips. And my limit above here, we're looking at 204.9. Okay. So better than a 1-to-1, but not quite our 2-to-1 that we want, which is why I would want to split my entry and do this twice. So I may go ahead and get in with my smaller or my larger, depending on whatever you want, or you could split this up evenly. It really kind of depends on how many pips you want to risk in total. So we've got 154 on this trade. My next trade is going to be, my next trade is actually going to be a different amount. So this is going to be smaller. This is going to be 80 pips. So we're looking at risking 230 pips total between these two entries. So if I want to, well, trade with a similar amount of risk as I have on all the other trades, then I'm going to want to trade something like a 0.05 in total. So I might do a 0.02 right now and a 0.03 if it comes further. So, or I could do that opposite. I might do a 0.03 here. Go ahead and click on buy right now, Rip City. Set a pending order. Pending buy. I need to make sure I set the right direction on this thing, and we do 1.19687, which is my lower blue line I've got drawn here. Actually, I'm gonna put that in the proper box here. Stop. Here we go. And my limit is my green line above. And what do we got? We got 122.4. All right, so incredibly better risk reward, almost 3-to-1. So if I split myself up, I do roughly, heck, we might as well do the same size. I can get in again and give myself a better risk reward on the second entry. So basically I'd be buying again at the lower price. If I expect this to come up for a few weeks, and it might, it's been falling a lot. I don't like to call bottoms. I don't think this is going to be the change in the long-term trend direction, but I do think that the dollar is maybe due a little bit of a reprieve from the beating we've been taking. Because at the end of the day, every country prints to the moon, and there's really no secret to that. They all print. So it's something that has been going on for a very long time, and something that will continue to happen. We need, actually, I did put the wrong rate in here. This is 1.19687. My fault, folks. I want to make sure I get this second order in here properly. I did forget to put the rate value in at the lower blue level, 1.9. Stop is good. Limit is 1.224. Cool. That's even actually better risk reward than we thought. So place. All right, let's get into silver. I want to move on. I want to show oil in here today as well. A lot's been happening with oil. Let's check out XAG USD here. Prasad, did you say we are the support? I'm not sure what you mean by that. But it does sound funny to imply that retail traders are the support, which is probably true in certain circumstances. But this is silver, and I'm very optimistic about silver myself. Yeah, we were at support for USD CAD. Yeah, that's what we were. That's what I was getting at too. Perfect. And if anybody does have questions about that, hey, if you want to see another idea in general, then just let me know. But this is silver, like I said. So let's look at the outer boundaries of what silver has done for the last many years. Let's just draw a line on the bottom here, outer boundary, slow uptick. Okay, this thing has had much bigger upticks in the past. This was kind of our trend for a few years here. Oh. This downtrend that broke, then the market went sideways. There's really only two kinds of trend that I know about: up, down, or sideways. It's either moving vertically or sideways. So that's why I like the box tool. And we were kind of in that range for years. I chose that range because it's kind of the edge. The market's already kind of tested it on the top side. I think that silver's got legs to go much higher. And for a lot of reasons, that's silver. I want to pull up gold for you also. Okay, so if you look at gold, and I posted this, I think, in the groups yesterday. But if you look at gold here, we have already reached our fresh all-time high up here on the top right. If we come back over to silver, it's pretty clear cut that that hasn't happened yet. And $50 silver is really where that would be. That's almost 100% gain on something like silver, which I think is very likely to happen. You can actually trade this from Smart Trader. I was not aware of that until a few days ago, but I did figure this out, and I'm showing you guys how to do it today. If you guys can see this, it's been on an uptrend for the last few days. Okay, some of you guys are going to use things like the Smart Gauge and whatever else. I like those too. Smart Gauge is going to tell me, you know, what all of these indicators think. On the weekly and the daily, they think buy. Which tells me that I should probably be looking for buys most of the time. If I look at lower time frames like the 4-hour or my 2-hour, you guys get the point. Okay, pretty much everything but the 5-minute chart is telling me to buy as far as all these indicators go, and the way that the Smart Gauge is calibrated. So if it's going to read all these indicators and tell me it thinks up, I'm going to look at this and say, okay, if I would have bought any time since the end of March, then I would be up then I'm going to assume that that's going to be the trend until it's not, because we are getting higher highs. And, you know, end of the day, the long-term trend is up. It has been. Okay, if I want to go ahead and pull a quick Fibonacci on our most recent C, this would have been a C price on this big wave here, just to show you guys what I mean. Okay, so this is the big wave, big jump we had. We did break out of that slightly earlier this year in January. Okay, so we did just peek our nose above that. That means that I am bullish, okay, until we get to our extension above. I think $33 is extremely likely. I think our next pit stop might be at $30.79, something like that on silver. So this is something you can trade from Smart Trader. I did not realize that until recently. You do have to trade it a slightly different way, because when I look at this, it says non-tradable instrument, if you guys can see that. But since it says non-tradable instrument, okay, all I have to do is click this drop-down box, and then I can choose whatever instrument I want here. So if I wanted to trade Apple, I could do that from the trading account widget right here. But I'm just going to scroll down. I'm going to look for silver, because I know a lot of you have looked at this in the past, and you can't necessarily figure out how to trade silver from Smart Trader, but you can. And that was actually kind of news to me. But if I wanted to look for a trade on this, I'm going to look for a trend continuation. Okay, so I'm going to clear out everything on this screen now that we've talked about where we think our highs are going, and those are much further away than we are. I'm just going to look for a trend continuation on this most recent trend. Right now, it looks like we are rated at breakout territory. I may want to aim for something above here. This is our current market price. Make this a green line at our extension level. And maybe my stop loss, I'll put below my C price, because we've already broken out of the range. Oop. And I can actually be a little tighter with that. I may pull it all the way up to somewhere like that. So even if the market does decide to test some lower lows, I'm going to be protected from that. I could get even tighter if I wanted to. But then from there, I just need to figure out where I want to put my pricing. Let's just say 27.142. That's where my line is. Limit price 28.947. Here's the important part for you to understand. If I put a 0.01 here, this is a risk of, I want to say $30 roughly. If you do a 0.02, it's going to be a risk of something like $60. So you do need to be aware of the fact that if you do place a small trade on something like silver or an index or whatever, then it is going to be heavier than your average Forex trade. So keep that in mind. This is actually I wanted to do this as a market order, so I did make a mistake there. This is a market buy opportunity we're looking for. I need to put in my rates. Stop 27.142, and my limit 28.947. All right. So now that we've figured out stops, limits, all that jazz, I can click buy. And I just traded silver from the Smart Trader platform. I know that a lot of people have been trading that in the MetaTrader 4 platform. That's historically how I've shown how to do it. The only way I've seen you could do it. But bottom line is that I just found out that you could do that directly from Smart Trader the other day, and I figured, well, it might be a welcome change for some of you that don't like to use two platforms. Personally, I don't mind, but it is convenient, I think, to be able to do it straight from here. Let's get into checking out something like oil. Oil has been very interesting as of late for a lot of reasons. Let's go to the all-time frame. And oil is another thing that is going to move, well, a lot more than currencies do, to say the very least. Oil has been on an amazing run. So I don't know what they're doing to drive up the price of oil. I know what they're doing. They're shutting down pipelines and they're decreasing supply of American oil. And that's been happening. America was one of the biggest producers of oil in the world. We're very quickly moving away from that. It seems to be that way pretty strongly. But this is our line that we've got on the top, and we have just broken out of that. And this is back quite some years, this is really what we had going on the bottom. Okay, so these really low prices down here, this is zero. Okay, that is the bottom. You know, I don't see a day where oil just stops being a commodity. I think that there is supply gut and we might have to slow down production, but I think oil coming back to zero, probably not. And really, if we keep devaluing currencies all over the world, which we have been, then commodities are going to have to catch up. If you look at the Fed's balance sheet, the U.S. Federal Reserve, they're looking at ounces of gold. They're valuing those on their balance sheet at $42. So at some point, they're going to have to stop that charade because their books don't make sense. You know, we've got $11 billion of gold, but there's, you know, an incredibly large amount of ounces. It doesn't make any sense for retail people to have to spend, you know, $1,800, $1,900, $2,000 on an ounce of gold when the government only values it at $42. So you're going to find stuff like that all over the place that just doesn't make sense. But really, when we look at oil, we zoom in here. Let's work down to our weekly time frame. This has been an uptrend for the last year or so, and we broke out of this trend above, and that could mean that we're coming down. I want to look and see what the pattern does. You guys have seen me do this on pretty much everything else we've looked at, because I know a lot of you, and by all means, if you've been faked out on a trend line break before, just give me a quick why in the chat box. If you've looked at a trend line break and you've said, you know what, it's game time, oil's going to go to 160, which a lot of people might have thought right there. Same thing goes with right here. That looked really promising. You know, this is a really promising 1, 2, 3 pattern that happened over here. You know, that looked like it was going to be off to the races time, back to 130. That didn't happen. So, I mean, yeah, thank you, Elaine. It's something that traders have looked at trend lines like, oh, the market's going the other way. Gotta be. That isn't how this works. Okay, so it's really, I just want to find the pattern. Same thing happened here. We tested that trend and it fell like a rock, and now we're finally at that price again. So it might be break time. It could be time for it to go to the moon. I don't know if you guys have noticed, but as soon as we got to this line, it seems like the US government is doing everything it can to hinder supply and create shortage, which doesn't make any sense. But there's obviously reasons why everything happens. I don't have to know what that is. I just have to know that, I don't know, we had hackers shut down the Southeast last week. We had Gretchen Whitmer turn off a pipeline coming from Canada to Michigan, and we shut down the Keystone pipeline in Pennsylvania in January. And then for whatever reason, we just allow Russia to open up a pipeline to Central Europe. Sure, we'll lift that sanction so that you guys can move your oil, but we're not going to let our American people do it. So it's really confusing what's going on with the oil industry right now. I don't know if anybody else is paying attention or listening to what I've just said, but all of that stuff doesn't make any sense if you're looking for, you know, free market economies. They're trying to give an advantage to someone. We just need to figure out who it is and then figure out how to trade that and make money off of it. That's kind of the whole point. There's no reason to look at all this stuff and get all bound up in a knot about who the president is, because you can't do anything. The only thing you can do is try to make money off of whatever it is they're trying to make money off of. So if they want to drive up oil prices, seems like they want to do that, then I'm going to look for buys, period. Everybody's looking at this right now and thinking, oh, oil's done, it's coming down. There's no way it can keep moving up. I think Goldman Sachs came out and said they were expecting $80 oil. So we're at 63. So if summer's coming and people are going to start traveling, you know, be able to take their mask off. I'm going to a concert on Saturday. I haven't been to a concert since November of 2018. I am excited to go stay at the beach and see some live music with other humans. Can't wait. I'm sure I'm not the only one. I'm going to have to buy gas to drive there and home. I get 15 miles to the gallon in the tundra. So I'm not the only one. A lot of people are going to be buying gas from Canada following what's going on with the pipeline in Michigan as it supplies some of Canadian provinces. Exactly. Exactly. So they are just trying to, I don't know what they're trying to achieve, but they are lowering the availability of oil. They're controlling the supply very much like they do with money so that they can influence the price, because they can't seem to influence the demand. It seems like they've had a hard time with that for a while. And you know what I'm looking at here, this is oil all the way back to, I don't know, this is the dip that happened right after COVID started. You know, Trump came on TV, we bought $30 billion worth of oil. It was a big deal at the time. People probably forgot. Futures prices on oil went below zero. Never happened before, because people wouldn't even get paid to take delivery of oil. Like $17 to take a barrel of oil. So like, and that's they give you 17 and the oil. That's how that contract came out, and that's why we're looking at zero on this chart here. So absolutely incredible. And Joe Biden came out the other day test driving a all electric Ford F-150 with a Secret Service agent driving with a second steering wheel, which I thought was pretty interesting. I could be wrong. That steering wheel could be fake. That man could not really be there. But they are really pushing electric vehicles, and they're doing everything they can to do it. And if they're going to lower, demand, they're going to have to lower supply. People already have cars. I need gas. And if my grocery store is going to have food, then they're going to have to get diesel fuel to move the trucks, period. Okay, so this is the trend on oil for most of this year. It looks like we're trying to inch our way below this line. And, as soon as we inch below this line, the interesting part is like, this is where the hackers came in, somewhere down here. This is where Whitmer decided, a week later or so, during that crisis, that we're going to shut down another pipeline. The Keystone pipeline got shut down really in January. Where's January on here? Let's see. Okay, here you go. There you go. This is what happened when they decided, Keystone's on its way out right here. That jump happened. So as they continue to move away from the U.S., giving supply, I mean, that's a $15 move. I think that they're trying to lower supply. We're going back to the petrodollar. They want more money in the Middle East for whatever reason. And they've been doing it all year. There's been bombs dropping since all this stuff has happened also. I don't know if you guys have noticed that. And I'm not here to take sides. I'm just here to make I'm here to make money, just like the rich people that run the world. I want to figure out where to get in and where to get out. And if they want oil to go up, you can't beat them, you join them. I need to look for a place to manage my risk on the low side, because this thing is continuing to make higher highs, higher lows, even on this lower time frame. It's moving up heavy today. It's up $1 or so today. I think this morning it opened at 61,793. It is now 63.7. It's up $2 today. So let's come to our 2-hour. Let's see what's happening. And it looks like we have a counter trend break. So this might be an opportunity for us to start buying oil right now. Okay, so I need to figure out how far this thing is destined, maybe likely to go. I say destined. There's really no way to know 100%, because we could be wrong. That's why I'm going to use the stop loss on every trade that you see me place, because if I'm wrong, I don't want it to wipe us out. So I'm going to use my smart fib tool from the bottom of my daily here. We are at the edge of the AB boundary. We have already broken out of it. I'm going to expect to eventually hit our extension level above. I'll make that green. That's all the way up at that $79 range. Sounds like what Goldman Sachs is talking about, right? They're smart people, you guys think? 79.9 is actually where that red line is. So if that's where Goldman thinks it's going, they have a lot of money, right? They came out and said that 2-3 weeks ago. We're in for the most oil demand in history. So if they think that's happening, the technicals have been showing me uptrend for the last year. We've already broken out of our most recent AB boundary. I need to just figure out where to protect my risk and buy this thing right now. That's what I want to do. That's really what I'm thinking. Yeah, I've been wrong before, and I'm happy to live with that. as long as I can afford to live with that. And that's really the whole point, okay, is that you can afford to live with whatever your decision is. So now we've figured out, okay, so here's our risk reward. I don't think oil's coming below 57 bucks. I don't think so. I think $80 is possible in the long run. This is a position trade. This is a daily chart we're looking at. This could happen in a couple of days. It could happen in a few weeks. Could happen tomorrow. Could never happen. Oil could completely go out of production and people stop using chapstick. I doubt it. My money is on increased demand as economies around the world open with this vaccine, and more people are living their lives. More people are tired of staying inside. They want to go do something and spend some of the money they've been sitting on for the last year. And the heck, the government needs them to do it. So if that's the case, I think that oil comes up. I think I sit on this for quite some time, maybe a few weeks, and I'm going to go ahead and set this right now. I do have to come down here. I think it's US oil this is labeled as. I'm not sure. I am crude oil. Here we go. And crude oil is saying 63, whatever. Okay, perfect. So this is the right one. I just had to choose crude oil. Now I can trade this from here. And we'll say 57 on the bottom. Okay, and my limit up top, we're going to say 79. Okay, so very big call. Lots of fun to make calls like this. 0.01 is going to be a fairly big risk. Okay, I think it's about $1 per pip on oil. So pay attention to how much money you put in this box. Okay, this is the most important part of your trading, is this box right here. If you don't know how much this is going to cost, then open it in a demo account and watch. See what happens. See if it's something that you're comfortable with. It's going to be different depending on the price of oil, the leveraging available. If you're looking at another CFD, maybe you're trying to trade something like GE or Apple or whatever, then obviously the leveraging is going to be different. You're not going to have 400 to 1 like you do on a currency cross. Bitcoin, for example, I think you're going to have 20 to 1. And Bitcoin's another one we might as well show in here today as well, because Bitcoin has been a bloodbath lately, as I'm sure you guys have all seen. But I'm going to go ahead and click on this buy button over here. Okay. So now we're in crude oil too. I'm going to go ahead and take a picture of this guy. We'll take a look at Bitcoin, and I think we're ready to split, unless you guys have some other asset class that you want. XRP. Do we have XRP in here? XRP is an interesting one. Do I have XRP USD? Yeah, I do. We'll look at that one, then we'll look at Bitcoin. XRP has been linked to the major banking industry using XRP, Visa, MasterCards of this world. So XRP's got a really strong downwind that we're looking at right now. Let's check out the all-time frame first. Let's do this thing right. There are people that would look at this and say dead cat bounce. I don't think so. I think that XRP may be primed. Yeah, I think so too, Ray. I think one of the guys on my team made a good amount of money on XRP this year already. So I've always been a fan of Ripple, afraid of it for a while because they got sued by the SEC. They tried to shut them down. Obviously that didn't happen. A lot of people think there's a lot of conspiracy behind that type of stuff, but it looks like it could be a buy literally right now. I don't know how else to put that, but let's come down to let's do the monthly time frame. Let's actually draw these lines. There's not really a whole lot to draw on here. Let's come to a weekly, because the bump has been smaller than it was the first time around, which is not a good sign if wave 2 is smaller than wave 1. But it's not necessarily over yet. I mean, they may just be elongating this growth or the death of XRP. There's really no way to know, because the government could just outlaw. If they wanted to, they could say, you know what, you guys aren't allowed to do that. You can't have that, just like they do with anything else. I mean, think about that for a second. If they don't want you to have something, they just say that's illegal. You're not allowed to do that anymore. If it's going to hurt the dollar or the pound or whatever it is, they may just say that it's going to destroy our banking industry. We can't do that. they'll do it if they want. Okay, so right now, man, this is a tough decision to make on XRP, which is probably why it's going so sideways. If I can't figure out what the heck to do with it, then a lot of times a lot of traders can't, and that's why you end up looking at formations like this one. Okay, so that's pretty ugly. I mean, really sideways movement. I don't think right now is a bad time. All I would want to do in this scenario is play the sideways, and really I would only be looking for buys towards the bottom. This did make a really emphatic move downward, so I may actually just pull a quick Fibonacci here from the top. See where our extension level is. That's all the way down here. We haven't quite made that. Maybe it doesn't get there. Who knows? Let's pull one on this other high as well and see what we're looking at. So that's kind of in the middle. I don't know. This could be a buy right now because we've got a piercing line formation. We've got a very big wick on this candle, but this is really aggressively coming down. But I think that a lot of people are thinking like you, Ray. Yeah, China made crypto illegal this week. Thank you, John, for pointing that out. Because if China can do it, so can we. I remember when people looked at Chinese policies on the internet and censorship and all that, and they were like, "Oh, that'll never happen in my country. That'll never happen in the U.S. They'll never censor us. They'll never take down websites or shut down the servers for different companies because they don't like what they say. Because we used to be able to say whatever we wanted in this country, and you just simply can't anymore. So if China can do that and make that type of paradigm change here in the US, any government can kind of do whatever they want. They could dump all of this stuff tomorrow. We could not be allowed to trade crypto tomorrow. So yeah, Trudeau admires China. You're probably right. It seems like China's admired by our president here too. It seems like he's made every play he could to try to make things nicer with China since he came to office, and really before he came to office. So I'm not here to be political. I just want to try to make money off of what they're doing. Okay, so that's the whole reason why we have these. It's not to talk politics, so we can talk about where the money's going to go. Because the point is that if I know that sort of thing is happening, this is a strong down move. We just broke. We're making lower lows. This is the best sideways right now. So I wouldn't want to try to trade this to the moon, and I might want to wait until it gets lower before I decide to become a buyer on it again. If I'm already in, I'm probably holding. But I don't really want to get in until this blue line down here at the bottom, because that's where we had our previous big turns. And maybe if you've got a lot of belief that this uptrend continues, and you really there's really no reason why, looking at this chart, why you should think, hey, this is never going to come up. Looking at this chart, this is an uptrend. So, there's no big mystery as to why people are looking for this to go long. Let's clear out everything on here. I haven't looked at this in a few days, but yeah, we took out our AB boundary on the bottom here. So we kind of broke our uptrend on the daily chart. That's what this lower low is right here. And I'll circle what I'm talking about so you guys can see a little bit more clearly. But there's a low here. This one went lower. And this is a really, really, really strong down move that we saw 2 days ago. So I don't know. I think it may come down and test some slightly lower lows before, and reality is that could be all the way down at 60 cents. So at a price like 60 cents, I might be a buyer with both hands. There's lots of reasons to believe that's a great price to get in. It's actually the 618 of this last range. It was a missed target. I mean, you guys might think I'm crazy. It's all about yeah, exactly. It's all about the money. And if you want to figure out why a decision happens from your government, just figure out who made money on it. It's really that straightforward. But if the market makes it all the way down there, then I might try to trade it back up to this previous high. I'll make this green. And that's something I would be very comfortable to talk about. I think this is a great risk reward. I might have my stop loss somewhere down here below in 37-cent range. I don't think we're going to get lower than that. But those prices were very common. Seems like we've got lower and lower highs on the top of this AB boundary that's formed above as well. So I'm not really interested in buying this as yet. Not to say that I'm not the only authority. I'm not the only authority on what direction something is going to go or why. I'm not guaranteeing this. I'm just saying that I would want to wait. I love you guys. These comments are you guys are tearing me apart right now. Hell yeah, we're crazy. That's why we're here. But yeah, I really, let's just say I don't think it's not going under if it goes under 15 cents, it's going away altogether, and I don't want to be in here. But this is really what I'm looking at on XRP. Bitcoin's maybe a little bit easier to fish through. I think Bitcoin could very much. Yeah, I appreciate that, Philip. I try to make as much sense as possible in these trading sessions. But it's all about conservative. You don't want to overextend yourself. I'm a double up and get up trader, and I have been on pretty much everything forever. And then sometimes that makes me angry because, like, BNGO stock, for example, this past year I got in. I had 5,000 shares when it was at 50 cents. I dumped it at $1.20, and I was super proud of myself. And then it went to $5. So, you know, some people are going to be upset in that scenario. I'm just going to find another trade. But let's look at Bitcoin. Oh man, this looks like a bloodbath here as well. And a lot of that is a lot of different reasons. Obviously, I think John already mentioned that Bitcoin was outlawed in China already. And, that could happen here. I don't think they're going to be using it to, sell Teslas anytime soon. It is kind of interesting, this 28.5, I think, man, people were telling me that was never going to happen. I don't think people are ready for what can happen in most scenarios. If we come to the all-time frame on Bitcoin, you guys see that monthly candle there? That looks bearish, right? Doesn't seem like a buy to me. So what I'm going to do is I'm going to look for downswings. This has been falling for the last 2 months. Why would today be the day that sentiment changes? And a lot of brokerage firms are not allowing you to buy certain cryptos anymore, or sell them. You can only close your positions. So if they're making it so that you can only close, somebody told them they weren't allowed to offer that service anymore. Canadians, people in the UK, you may not be able to trade leveraged crypto anymore. And it's more than likely because they don't want you to be able to hedge yourself versus the crypto you have in your regular account in Coinbase or whatever it is. So, I mean, it's really, everything is designed at somebody to make the most money, and that's usually not going to be you. So you need to figure out why things happen and figure out who that benefits and what direction the market's likely to go because of it. If Tesla's not going to accept Bitcoins anymore, I would venture to guess that maybe Dogecoin gets put away soon, and maybe Mark Cuban stops accepting it at Dallas Mavericks games, and they don't take it at Oakland Athletics games anymore. And maybe crypto takes a big hit again. Maybe more countries make it illegal. If it gets made illegal in the EU, for example, that'd be a big deal. Australia, all sorts of different places. And those places could get strong-armed by other countries like China. So, all of those things said, and this is not about predicting the future. This is about trying to figure out where we can manage our risk and what makes sense. Because it doesn't matter what I think. It really just matters if I can manage the risk on that trade. Okay, so if we're looking at, we're still looking at Bitcoin. We're looking at this top that formed. Let's clear everything out on here just so I can get rid of that. One thing to notice immediately, and this, everybody has trouble with trend direction. Okay, every trader I've ever worked with has had difficulty figuring out trend direction. That's a high, there's a lower one. This is a low, and here's a lower one, and here's an even lower one. This trend is down, and it has been since April 12th, 8 days ago. Okay, and that trend has been absolutely huge. The high point on this trend is $63,000. The low point is $28,000. That is a 50% swing. You guys see that 50%? Huge. Does that sound like a bullish commodity to you? if gold fell to $1,000 tomorrow, that's kind of what this is what we would be looking at if gold just fell to 1,000. So this is not bullish, and I'm certainly not going to be anytime soon. This is a sell opportunity if there's ever been one, and right now may not even be a bad time. And this may be something that you get real lazy on, and maybe you just pick a previous high, previous low, look for a range trade. The Fibonacci tool is good for something like this. We're at the 618 right now. This might actually be a fantastic time as we speak to go ham, aim super low on this thing. This could come all the way down 25,000. Our Fibonacci extension is all the way back at 19,528. No, you don't think so, Philip? You don't think so? Hey man, you could be right. Let's look at the all-time frame again. Let's look at the all-time frame. If you guys aren't comfortable with that, then that's fine. Let's do this the lazy way. Let's pull this big wave right here. Okay, let's look at what we've got. Maybe we come back and at least hit our 618, 27.8. That seems like a more comfortable level. I think one that 28,000. I think people would probably be more comfortable with it getting there, but maybe not. Maybe you guys are all thinking buy, and that wouldn't be crazy. Wouldn't be totally crazy because Bitcoin has been the hottest investment ever. You really can't sit here and with confidence say up or down, just so we're on the same page. It really just comes down to, does that seem like something feasible? Is the risk worth it? So a lot of you, it's not going to be, depending on how big your account is, because this is going to move like crazy. I don't know if you guys realize how much a standard lot on Bitcoin the last few days would have been an absolute it would have been an absolute explosion, nuclear bomb for most of your trading accounts. And I know that because I run the company. So bottom line is that if everybody was in, standard lots of Bitcoin, you guys would all gotten blown out this last week. If you guys were all long, you'd be gone. I don't care how big your account is. I do care about how big it is in essence, that you maybe not be gone. But if you had less than 30 grand and you were buying all the way up here, standard lot positions, we have a lot of clients that like to do that on Bitcoin and Ethereum and all sorts of different stuff. But these are going to move way more than anything else. People got smoked on that this month. I can tell you that right now. So it really doesn't matter what you think or what I think. This is going to move a ton. I think we can both agree on that, up or down. But the reality is that I don't really want to buy where it is right now, and I don't really want to sell either. It is making lower lows. If anything, I may want to try to get back into this meaty area down here because we had lots of price demand down here. So if anything, I might just wait to buy once we get down to this lower level here, and maybe I have my stop loss a little lower. But I don't necessarily want to get into this right as yet, because I think it's got more bearish activity on the horizon. But we are out of time here today, folks. I'm going to go ahead and start closing us off. But if you guys do have more questions about anything, if you want to see something in particular next week, then by all means, either ask me for it in the chat box during the presentation, or if you're watching the recording for this on YouTube, then put it in the comments section. I'm going to put in the show more section, I'll put links, anything we talked about. And I really appreciate everybody coming out. Really fun session for me every week, because I get to run through all of the stupid things our governments have done throughout the week. Look for some nice swing opportunities. We ran a couple robots today. But thanks everybody for joining. You guys have a wonderful rest of your day, weekend. Be good, or be good at it. Take care.